All right, welcome back for the episode of Carnivore Trades. Today is Saturday, March 4th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, doing a special little video here today. Obviously, we don't normally do the videos on the weekend. But we're going to do a little follow-up here to the zero DT phenomenon. So there's been tons of talk about it. It's more talk every single day. I did a video on this in, I want to say December. I'll link that into the at the end of the video if you want to watch that. Kind of explaining what was going on. But there's been a few developments. I shouldn't say developments here, but there's a lot of curiosity regarding the subject. I want to kind of break this down a little bit. Some people are concerned about the market kind of. There's talk of the market breaking. We'll say that. J.P. Morgan's, a few of their strategists came out and said that, like, oh yeah, it's going to cause a Volmageddon. I did suggest that as a possibility back in December, but I just want to explain a little bit more of this. So right now, it's like the financial media is kind of explaining this, and they're talking about it's basically they're making it out to be like retail is just gambling, and there is a lot of that. I mean, like, let's not say that there's not, but this is institutional driven, and some of the a few things that everybody needs to understand here. And what I'm going to kind of break down here is that right now, well, you're going to hear a lot of talk about like the tail wagging the dog, and what that means is, so instead of buying an option here, let's say like just say Apple here at 150, let's say you buy a 160 call, if Apple's share price goes up, generally the price of that call is going to go up as well. But what we're seeing now is just a perpetual gamma squeeze. So essentially the options, and because of these zero DTs are so popular every day, the options are causing the prices to appreciate, as opposed to the underlying causing it to appreciate. And again, so once you get through certain, when a market maker sells an option, right, they have to hedge it. And, if enough orders come in, then they have to keep hedging, and then you get those squeezes. A big level this week was that 4,000 level, as you can imagine. So as soon as we got through that on Friday, we went up here, we chopped around, it got defended really quick, and then once we blew through it, it was off to the races. So you can see that, it's a classic gamma squeeze. But this is happening pretty much on a daily basis, or we're going into these levels and then we're stalling at those levels. So like one of the levels that I talked about many times in my videos this week was 39.50. That was an area that the bears were trying to get through. Obviously we couldn't, and we had to push up there. One of the things that I will talk, and shout out to, by the way, check out RT Gamma, Real-Time Gamma, and Horse has done a very good job, and you guys follow him already, of kind of trying to break this stuff down. But this guy is really a cheat sheet right now. So he's probably posts like almost every 5-10 minutes the Real-Time Gamma and where the popular strikes are on the SPX. It's been a pretty awesome tool if you're into that stuff. If you're not day trading, you don't really need it. But basically, this is where we're at. Institutions are using this. It's not just retail. The thought that things could break is, obviously the catalyst would have to be, we'd have to have some type of a panic, and we would see perhaps just a ton of gamma squeezing to the downside where that hedges don't unwind because there's panic. I don't really see it. They said it, JPM said kind of like a Volmageddon repeat. I don't know if I'm in that camp, because that was more so created by like the vol products themselves. But with gamma, it unwinds at the end of the day. A lot of the time, so for instance, like even just go back this week, I believe it was one of these days here, or even Thursday, where we squeezed up here, and then you saw kind of a little unwind going into the close. There was one last week. It was last Friday, where we were pushed down, we couldn't get through 39.50. Big surprise, right? We rallied up, and then we had that big unwind at the end. So I don't know if it would necessarily be like that. It might be a little different, but it certainly is a concern. And another thing that people need to understand here, this is huge, big time. It's not just gambling. Zero DTE, a zero DTE SPX index option is actually just a disguised ES order. I think this is my theory here. A lot of the internet, trading is very popular right now. It's more popular than it's ever been. Maybe a little less popular than it was in 2020, 2021, because there's been a lot of losses and a lot of the retail, the retail crowd got shaken out, but it's still very popular. A lot of people know about the dark pool now. A lot of people know about options X games. A lot of people know about this stuff, and these guys are trying to find new ways to hide orders. This is a really good way to hide orders because you buy the index option, and if it it's as long as it doesn't expire outside of that range, or if it expires close to your price, you just take delivery. Nobody's looking for people taking delivery on options. If you take a look at this volume on the spiders, it's been pretty soft lately. So they're hiding some of this volume here. Even on the ES, they're hiding some of that volume. I think this is just my opinion here, with those orders. So basically, a 0DTE call is basically just a zero or an ES buy order, in many regards, and that is something that people definitely need to understand. Outside of that, right now, this is what's driving the market. I know there's concerns. People are saying like, well, it's going to completely, nothing matters anymore. This is just gambling. That's not true. There's still the bigger dog wagging the tail. And I'll show you why here. Why did we have a rally today, or I should say Thursday into Friday? I did suggest that we probably were going to bounce Thursday morning. And one of the reasons I mentioned for that was the 2-year was going in a double bottom, and it's pretty much still just that simple, right? 2-year yield, as long as that bounces up, that's going to allow the market to bid up. So we're still seeing the normal, the normal fundamentals of the market work, if you want to call it that at this point. So it's not like, obviously there's manipulation, but it's not manipulated in the way that you might think, or the way that people are concerned about. But it is definitely an amazing phenomenon. And just want to do a little follow-up video. So hope that helps everybody kind of understand it a little bit more. But definitely keep in mind that the dark pool, like this is the new dark pool in a way. So that is something to watch for. But yeah, if you are a day trader, you should be paying attention to these gamma levels. They're very important. As soon as we broke that, you can see here on the spiders too. As soon as we broke that area, spiders are a little bit different than the SPX, but that 400, 401 area, it was off to the races. And then we just blew through every other gamma level, which was significantly smaller than 4,000. So anyways, guys, going to wrap it up here. Hope it helps everybody out here. You guys take care. Come find me at carnivoretrades.com. Talk to you guys all next week.